Hi, Tony Carrion with you. Financial news outlets often comment on similar trends in trading between the stock market and cryptocurrencies, as if they were somehow joined at the hip. One of the more recent examples were the declines in both stocks and cryptos following the announcement of the COVID-19 Omicron variant. But as we know from the study of socionomics, the new social science discovered by Robert Prechter, exogenous events like news headlines are not the engine for market price movements. Instead, they are the product of endogenous changes in social mood. Market sentiment operates in polarities between optimism and pessimism, and extremes in one direction ultimately give way to their opposite. But why then would cryptos and stocks sink on the same bearish headline? And we can even go back to March of 2020 when both markets cratered following the early news of COVID-19. Well, let's begin with the premise that both stocks and cryptos are regarded as risk assets. As this correlation matrix suggests, once cryptos became an asset class in their own right, it became possible to see just how positive or negative correlations are between different asset classes. Historically, stocks and cryptos have been correlated in around the 20% range for both Bitcoin and the second largest crypto by market cap, Ethereum. On a 90-day matrix, basically covering the last quarter of this year, the positive correlations tightened towards readings in the 30% range, which as far as I know is a first for this data. It tends to corroborate the idea that the nature of both stocks and cryptos as risk assets is really what explains the similar directional moves, not the headlines. In other words, the headlines may provide a catalyst for, say, a big sell-off, but shouldn't be construed as the cause or the reason. Another more probable reason is that being risk assets, both will be more likely to respond in a similar fashion when a quote risk-on sentiment climate gives way to a risk-off climate, or vice versa. This chart of Bitcoin futures, which shows the daily sentiment index, courtesy of tradefutures.com, suggests that following peak readings registered during the highs of October and November in the 90% range, that Bitcoin did indeed go on to collapse in price some 30%. Over the same period, the S&P 500 futures fell a bit over 4% following a DSI reading of 93%, with readings in the 90% area being considered extremes in optimism by this measure, while at the same time the Nasdaq futures collapsed around 7%. So the bottom line is that similar trends and changes in market sentiment for stocks and cryptos that pre-existed the Omicron announcement were the more probable cause for the price collapse that occurred in both asset classes. Now, a final note on correlations is that the strongest correlations have readings of 50% or more. Now, that becomes obvious when we look at the price action following the bearish DSI readings. Bullish sentiment returned strongly in stocks, whereas in Bitcoin, it's just starting to get off the ground. Thanks for watching.